Dear traders, I'm Anna Kasatkina. You're watching Weekly Financial Review on InstaTV. Trades on Wall Street ended Friday with heavy losses. Sales particularly increased during the final hour of trading. Investors sold risky assets such as shares after news about the weak US GDP growth and low financial results of some American corporations that overshadowed a jump in oil prices. The major stock indices ended January with the biggest losses in a year. On Friday, the S&P 500 closed at 1,994.99 points, down by 2.8% on the week and 3.1% over January. Only the energy sector managed to finish the day in positive territory, while the other 9 sectors closed in the red zone. Dow Jones Industrial Average fell to 17,164.95 points. The blue chip index moved down by 2.9% on the week and lost 3.7% over the month. Nasdaq Composite finished the day at the level of 4,635.24 points. The weekly drop of the tech-sensitive index was 2.6%, and in January it depreciated by 2.1%. Analysts said that US GDP growth below expectations provoked investors into selling stocks and buying bonds. America's gross domestic product grew by 2.6% in the fourth quarter on an annual basis, and that was well below a 5% increase recorded in the July-September period. Meanwhile, the Chicago PMI rose in January due to an advance in new orders and the best reading on employment in 14 months. Despite numerous financial statistics that was below market expectations, some companies managed to surprise investors with strong data. Thus, MasterCard reported that its profit rose to $801 million, or 69 cents per share in October-December, from $623 million, or 52 cents per share a year earlier. After the report, shares of one of the largest payment systems increased in price by 2.9%. The corporation's financial results beat forecasts of economists who expected the income to be 67 cents per share. At the same time, MasterCard's revenue advanced to $2.42 billion from $2.13 billion and against the forecast of $2.39 billion. Late Thursday, the tech giant Google reported a rise in revenue and profit, but the data was still shy of expectations. Google's quotes jumped by 4.7%. However, shares of Google have declined by 7% over the past 3 months. Concerns over slowing revenue growth in Google's core search advertising business has been a key reason why the company's shares have fallen in recent months. The amount Google receives per ad click slumped by 3% compared with the prior year. In the fourth quarter, the corporation's net profit was $4.76 billion, up from $3.38 billion a year earlier. Google's revenue rose by 15% to $18.1 billion. And this concludes the review of the latest financial events for this week from InstaTV. Thank you and goodbye.